Thanks for joining Jonathan Mishkin, trusted expert in tax law and tax controversy. I'm your host and Jonathan's paralegal, Brandy. Today, Jonathan will discuss the recent increase in contribution limits to tax-deferred retirement savings plans and cost of living adjustments for the tax year 2023. Hi, Jonathan. What do we need to know about the contribution limit increase and the cost of living adjustments?
Hi, Brandy. Thanks so much. Good afternoon, everybody. What I've learned today is the IRS made an announcement that they're raising the individual amount you can contribute to a retirement plan, such as a 401k, a 403b, 457 plans, or the thrift savings plan for federal employees. Further, the IRS also released some guidance concerning cost of living adjustments affecting limitations for pension plans and other retirement assets for 2023. So let me get into the specifics a little bit for you. So in 2023, individuals are now able to contribute up to $22,500 into their retirement plan. That's a $2,000 increase, or just under 10% from where the numbers were in 2022. This jump, as I'm sure you can imagine, is from the recent bout of inflation, which has been going somewhere around 9%. So this increase sort of keeps pace with that. It's indexed. Further, we have something called catch-up contributions that they let people who are, in essence, over 50 years old, they're allowed to contribute now up to $30,000. So that's a big savings in that regard, and that doesn't count matching contributions. Further, catch-up contributions are going to rise to $7,500. Previously in 2022, it's $6,500. So that's 15.4%. These are all great because we want to keep retirement contributions pacing with inflation. Further, when we talk about IRAs, deductible contributions to traditional IRAs and what we call after-tax Roth IRAs, their also limits are going to increase. We're going to go from $6,000 to $6,500, which is an 8.3% rise. Unfortunately, the catch-up contribution was left at $1,000. And I just want to remind everyone, to put money into a Roth in the 2023 tax year, your modified gross income must be below $153,000 if you file by yourself, $228,000 if married filing jointly. So it's gone up about $10,000 to $15,000 from where it is now. And for traditional IRAs, to deduct at least a portion of your contributions, your modified adjusted income must be below $83,000, which is a $5,000 raise from this past year where it was $78,000. That's for individuals. Joint filers, it's going from $129,000 to $136,000. If you personally, though, don't have access to a workplace retirement type plan, but you have a spouse who does have such eligibility, then your modified income must just be less than $228,000, which was raised from $214,000. And finally, if you are someone that has what we call a simple retirement account, your contribution limit was raised from $14,000 in 2022 to $15,500. So in general, the point of this update was to let people know, yes, we are having problems with inflation. The government is trying to pass some rules to allow us to continue contributing to our retirement to pace with the issue of inflation.
Thanks, Jonathan. If you need assistance with tax planning or resolving your tax issue, please log on to jmishkinlaw.com to schedule a consultation with Jonathan. Thanks.